Oil still trading around these 4-month lows after yesterday's big drop. For the third time only in history, the International Energy Agency announced it will release from emergency stockpiles. Our next guest says oil prices will continue to fall further. Gianna Bern is with us now. She is the president of Brookshire Advisory and Research, and it's an investment advisory firm focused on the energy sector. She is joining us right now from Washington, D.C. She's also, I might mention, the author of a book, Investing in Energy, a primer on the economics of the energy industry. Thanks so much for joining us, Gianna. The IEA's move is controversial in some respects to sort of prop up the world's fragile economy, it seems. Did the IEA make a decision to trump OPEC's failure to boost output on June 8th?
Well, certainly the act that the IEA and the Department of Energy has taken, if you put this within a larger context, yes, it is very much unprecedented for a global coordinated effort, only the third time. And it is a shot across the bow at OPEC. If you look at the OPEC meeting that we just had 2 weeks ago in Vienna, they came away empty-handed. And OPEC, has had a little bit of a track record over the past couple of years of getting a coordinated effort to bring prices and crude oil prices into line. So this is very much a statement by the West saying, we're going to take matters into our own hands. You couldn't come away with a production changes in production. So here we're going to take 30 million barrels, put it on the market, and make a move at prices, particularly at Brent crude prices.
Gianna, just to put it in context, the first time that the IEA members collectively dipped into the stocks was in the wake of Iraq's invasion of Kuwait in 1990. The second was in 2005 after Hurricane Katrina. Both of those events seem much larger than just the U.S. consumer paying for higher gas prices at the pump, right?
Yes, the Strategic Petroleum Reserve, the idea behind that is for indeed a national emergency. So if you look at the context of where we're at today, one could easily say that no, it is not a national emergency. However, if you look at the administration's tools and what do they have in their toolbox, they really are fairly limited. And if you look also to see Brent crude prices across the Atlantic in Europe, while we are all feeling very high gasoline prices here at the pump in the U.S., in Europe, gasoline prices are almost double that of the U.S. market. So yes, it's not a national emergency. It's intended for, SPR is intended for a national emergency. However, there was, I think, little choice left when you see high crude oil prices, high gasoline prices as a drag on the global economy.
Gianna, I know you say the prices are going to move lower. By how much? By when?
In the short term, we'll begin to see WTI begin to creep down into the $85 per barrel, upper 80s is a fair estimate. Brent will trade closer to the $100, $102 per barrel range. However, longer term, when you look at this within a larger context, I do think that this is a short-term solution to really what you have as a longer-term problem. And if you fast forward going into 2012, we are going to see crude oil prices begin to creep back up on emerging market growth. And I also think we're going to continue to see some pressures on the WTI Brent spread and some continued widening on that WTI Brent spread.
Okay, Gianna, so lower for the rest of this year, moving higher again in 2012. Thank you so much, Gianna Bern, joining us there, president, principal, and founder of the Brookshire Advisory.